We're trying to find out creative ways to be able to get more involved in the truly rural-based manufacturing solutions, and we're trying to figure out a way to convince our investors that we should be able to do some infrastructure or at least some capital equipment expenditures in those pre-revenue companies that aren't quite ready for farm credit perhaps, or certainly not ready for the Schedule I banks. In terms of stage of development, and I'm at the end of the day, so I'm running through this really quickly because I don't want to keep you any longer than you have to. This is just something that's in our annual report and website. If you do get an opportunity, please go and have a look at our website. We've got a lot of information there that might be of interest to you. This is just simply a notional stage of development activity. But what I will comment is, for those people that don't recognize that little symbol on the left side in yellow, that's kind of a sideways 8, that's an infinity sign. And that really reflects the opportunity to invest basically unlimited amount of monies into basic research. But once you get past you've got an idea that's actually got some legs to it, then you've got reasonably, maybe it's more exponential than linear, but basically you've got a path to market where as the technology gets further developed into a product, the cost to get to the next leg tends to be a little more expensive as we go, which is a little bit opposite to what a lot of technology people think. They think that building the technology you're almost to the home run, and then the rest is just a little bit of finding some dog and pony sales guy to finish the job. So any point being is that if you move from the left side to the right, it's right in this middle here is where we participate for the most part. And as Armand said, that's sort of the seed stage or even ahead of the seed stage, and it's the area that investment in Canada and actually in North America, returns have been below optimal, actually negative in almost all jurisdictions. So investors, particularly institutional investors, have exited that space and moved further upstream where they can get more reliable returns, and the numbers reflect that. So the gap where we operate is even larger than it was a few years ago. These numbers are from 2006, 2007, and they're actual to scale numbers for Alberta. So on the left side, you've got government sponsoring $535 million for sponsored research and $152 million from industry. That doesn't include oil and gas, but as it probably isn't going to increase that a lot. Oil and gas sector doesn't do a lot of research spending. Interesting enough, but we don't have good numbers, so it's not there. We were at the bottom there back in those years. It was before our AVAC initiative, so we invested in $5 million in pre-revenue opportunities and $7 million in research. The big orange and orangey yellow gap is the amount of money that could be available to fill the gap between an idea and a business versus what actually was in that space. So it's a very big gap. And what's happened over the last 5 years is the gap has gotten wider and a bit deeper. And then there's a little gap further over that's the pre-IPO gap. If I was going to do this chart for today for the region, those two yellow sections would probably have connected and maybe even extend a little bit further to the right, to that direction. So in terms of the green colors, it's a traditional model. The middle part where we invest in startup companies, it's alongside friends and family and fools is the way it's described. What we try and do, and this is something that's a bit of a difference from a lot of folks, we're trying to find not just the friends and family of the entrepreneur or the entrepreneurial group that's trying to drive the business. We're trying to find the private investors that want to invest because they like the opportunity and they're going to put some discipline and some rigor to the team. That's the angel style investor that's so hard to find, that's so important, I think, in terms of incubating and mentoring those startup entrepreneurs to be successful. And the venture capital shape on the right side there, if you were to measure today, it would be moved a little more to the right, and I think it would be a little flatter. It won't be quite so big. So anyway, that's sort of the continuum. And the line along the top is if all the good opportunities that could be supported were supported, this whole chart would be green. So to give you a sense that it's not like there's a lot. One thing that's different here in Alberta, and I'm sorry to belabor it, but I think it's important, the industry-sponsored research section in the back there is very, very low. Actually, both government and industry-sponsored research numbers are low relative to other jurisdictions. But what we don't have here in Alberta in agriculture, we don't have it in any industry other than oil and gas, is big players that can put lots of money into sponsoring the kind of research that they need for their businesses. So this is the point that we need to be creative about trying to find ways to introduce and continue to keep interested, those large companies, like Armand talked about the Monsantos and Dows, and of course Dow does have an office here, but those are the kind of companies in the ag space that we need to find ways to be able to engage so that they can start to increase the size of that amount of money that they invest in the province. Okay, for us, back to us again. So since we started in 97, 98, we've committed just under $110 million, and these are in essentially homegrown businesses or businesses that are going to have a real big impact in Alberta, we think, as well as some targeted research areas, about 30 million roughly in that area. In terms of results, it was just over $50 million that went into Alberta-based companies in that period of time in agriculture, and then there was 17.2 in research. But what's more important, I think, is that of that, 37 of those 90-some companies have already got to market with sales, and they've generated collectively to date just under $500 million in sales over that period of time, and it keeps growing year over year. You can look at the charts at the bottom. It's a nice curve that goes to the right direction. So what that's telling us is that we did find some good companies and did invest in, and they in turn are starting to generate some decent return for everybody involved. It's what we're supposed to do. On our tech side, that's what we call capacity builder. That's our direct investing in tech companies. We've invested just under $20 million in 22 companies. And this is an interesting thing for people that don't know much about tech. Tech companies, for the most part, are nimble and they're fast. What takes an ag company 8 to 10 years to get to market with, these guys are doing in 18 months. So, within a year of when we invested in a number of these companies, they were already going to sales. So over half these companies have already generated commercial sales. And we've invested in the first one was roughly 2.5 years, 2 years ago, I think, Randy, is that right? The first company? So within 2 years, over half have already generated sales. So I think there's a lot of lessons learned from that sector and how we can maybe think a little bit more nimbly about our more traditional businesses. And there again, to the end of March, they'd already reported almost $12 million in sales. So if we layered on our value-add agriculture list to that, our first sales reported by any of our companies, I think, was about 4 years from the first time we invested. And we were investing in roughly the same stage of company. So just an interesting piece. So in terms of the venture capital world, back to that orange chart where it had the shapes, a number of years ago, we were given the opportunity and the challenge to try and find and invest in venture capital. Strategically, Avrio made sense to us because of our value-add agriculture interests, and so we invested in that company. The other two, though, are the two leading early-stage technology funds in Canada, and they were both out trying to raise their second fund. One's based in Vancouver, one based in Montreal, and both have operations now in Alberta. So we invest in both, and already they've invested in 3 of our portfolio companies, and they've got a number of term sheets out right now with other Alberta-based companies. So already, and they've raised more money for these companies that they've invested in. So already our $20 million that we committed to these companies, actually 22, there's already more than $22 million go into these 3 companies in the province already. So I think in terms of return on investment, we've already broke even and we're kind of on the uphill swing. So I'm really quite proud of what we've been able to do with what we call a very small amount of money for the venture capital fund of funds business. But strategically for Alberta, these guys are the ones that are looking at your deals on the next stage. And they're the ones that will bring in partners, and even through the due diligence process, they may not ultimately invest in your companies, but they'll bring in enough other partners that the exposure you get from that is significant. So not to be underestimated. And I understand being disappointed about not getting your money from a venture group, but the exposure you get from that is invaluable. Okay, now our current portfolio is up here. It's a bit busy. Some of you I know have logos I see up there on the list. So, and I heard a few of the same companies mentioned earlier, and I know there was a few presentations this morning. Just to comment about clean tech for a minute, or infotech. In this list, I mean, TTS, TAM that was here earlier, fits into that group. Synodon, which is a gas detection system for hydrocarbons. It's oil and gas, it's clean tech. What all do we have here? Coolit. It's a tech company that actually does water cooling for computers, for motherboards and processors and whatnot, with some software, and it just reduces the energy footprint. So it's a clean tech deal. There's quite a number in this list. Probably about a quarter to a third of this list could be considered either infotech, energy tech, or clean tech. Mostly energy tech and clean tech. So just to reiterate the point, Just because you're doing a value-add ag deal or a forestry deal doesn't mean necessarily that you're not also of interest to the folks investing in energy or